Good morning, everybody. I'm Ed Parcaut, usually here with Mike Kelly, but he's already on his Christmas vacation. He takes it early, and that works for me. This is just the facts today. I don't know if you understand. Normally, when I go live just by myself, I just talk good about the facts because if I have a conversation with myself, well, we're going to actually have some problems. All right, first thing, Dow was down down 243 points, which is much worse than earlier today. The rates are up about 13 basis points, and I'm sorry, rates are better by 13 basis points, and the 10-year sitting at 4.16, open today at 4.17. It is going back the other way, positively the way we want it to go, and it all had to do with some information we had come out today. What did we have come out today? Retail sales. Retail sales were unchanged in October, weaker than expected. Retail sales was unchanged in October, the weaker than expectations of a positive 1/10 increase. The control group, which you take out autos and gas and building materials, increased by 0.8, above estimates of 0.4. So it came in mixed. Let's just put it that way. The big thing that I really want to go over today is the BLS jobs report that came out for October and November. Now, what we're not going to have in this report is the unemployment rate for October. And the reason is because how they do that is they actually make phone calls and ask people, are you working or not working? I know that's how it works. I don't know how they get all the question is, do they call all their cell phones? Do they call just landlines? How do they get all that? All right. So in October, it showed a loss of 105,000 jobs. Just think where the rates could have been if we would have had that in October. But that was because of a lot of the government jobs that we did with layoffs, and also the federal buyouts that they did for the people. Then and now let's look at November because there's no unemployment rate for October. November also had November had 64,000 jobs added to the employment, which is modest. It wasn't, major what they were expecting. If you look at the revisions in August was down. It was up 22,000. I'll get it together today, I promise. All right. So August, they revised the numbers from a positive 22,000 to a negative 26,000. See, I was right from the beginning. I just didn't have the right number. September from a positive 119,000 to a positive 108,000. So that's a net change of about 33,000 jobs negative. Household survey in November. So this is how they get the unemployment rate. They said the labor force grew by 323,000. Unemployment rose by 227,000. The unemployment rate rose to 4.6% from 4.4%. And that is there's two types of employment. There's the ones where people are actively looking for work, and that's what that rate is. Then there's U6 employment, which means people who have not really given up, but they haven't been able to find a job. They're doing some other stuff. That's the U6. That one's up to 8.7%. And that's the highest it's been since 2017. If you take out the COVID years, because everybody was laid off during that period of time for a short period, everybody didn't work. So if you look at all that, you look at 983,000 full-time jobs have been lost, and 1,025,000 part-time jobs were gained. So we lost full-time jobs but gained part-time jobs. That's not a positive thing. Wages, hourly earnings just up 0.1 in November. Annual wage growth dropped 3.8% to 3.5%. All right, so the ADP employment also came out, which showed an average of 16,250 private sector jobs created per week over the last 4 weeks, ending in November 29th. This suggests a total growth of about 65,000 private sector jobs for the month, aligning closely with the BLS week number. Bottom line, where employment is not as good as it should be. But what are you going to do? That's how this all works. We want in the bond market where we're talking about rates and everything else. We want it horrible. If we have it where it comes and unemployment goes to where the unemployment rate goes back down, rates will go back up. That's just how that works. Doom and gloom is what the bond market likes in rates, not positive. The only positive thing we'll like is if we pay off all the debt of United States, and then the rates would go down to like a 2%. Anyway, What else we have today? Google. So Google is entering the portal wars when it comes to MLS. Google is now testing embedded MLS powered listings directly on mobile search results. They're currently active in Chicago, Denver, and Austin. They have a partnership with Come Home. It's a house canary company. What this is doing is it's really shaking up Zillow, CoStar, and Homes.com because of Google coming into the market. Zillow is also supposedly insulated a little bit, but I did see its stock drop the other day because of this. Redfin is now owned by Rocket Company, so they're going to see decline potentially in site traffic, but they're still going to be able to monetize things into their own Rocket companies. Why does this matter, really? Google is the biggest serious player out there, and for them to go into the real estate market, that could really change how lead generation is done for agents and brokers. That's why it's good. I think it's a positive thing because the other ones have owned it for too long. I interviewed a company a couple of weeks ago, a brand new company was trying to do the same thing, and they're going to make it where you give the money instead of giving the 30 to 40% that you pay for leads. And I don't know if you know this, but agents who buy leads on Zillow and that kind of stuff, they pay, or some of these companies, they pay it on the back end. I don't think buyers and sellers understand that. And so there's other systems that are coming out to where that doesn't work the same way, so they can make it much better for everybody. What else did we have? Mortgage Banker Association came out with their applications for last week. Volume is up 3.3% year over year, but down 7% from October. Loan types that are doing it, conventional is at 40, is almost half the market. FHA is 37%, VA is 12.7%, and USDA is 0.7%. Loan sizes went down from 381,404 in October to 378,063. Long story short, overall applications are still up. This is to buy, for buying homes. But and we talked about, I think, this yesterday about how the pending sales are at a 4-year high, and an application are at a 4-year high. And that's positive going forward. Even though we have inventory down, that just means it's less choices, and that's not a good thing. So hopefully we'll get the inventory to move back up first part of the year. That's about it for today. There wasn't a ton of, there was some news, but not a ton of news. I like the fact that the bond market is doing much better, and we're down to 4.15 right now. And that's about it. Again, thank you so much for being here. We really appreciate you guys watching us and talking to us. If there's anything you need or want to talk about, just reach out to us. And even though Mike's not on the camera, he is still working, so you can reach out to him also. Let him know that, hey, we missed him on the show today. And everybody make it a great day, and we'll talk to you tomorrow. I should say, I'll talk to you tomorrow. All right, bye.